All right, it's about 5 minutes after 3 now, so I think it's time to get going. We seem to have a pretty good crowd here today on this one. Good afternoon, everyone. This is Richard Ift from the Federal Insurance Office. I am joined by my colleagues Sherry Roulette and Jeremy Pam today. And also on the webinar is Mike McCauley of Veris, who runs the data collection operation for Treasury through the ISO portal, who has done so for the last, since we've been doing this back in, starting in 2016, I guess. Mike's voice is acting up a little bit today, so he will be able to respond to chat messages directed to him. I have a bit of a report from him that I'll give a little later on where things stand on registrations and everything, at least from ISO standpoint. So anyway, he is there, but he may be a little harder to voice his thoughts today. Usually we do have somebody, usually Aaron Brandenburg from the NAIC on the call, who coordinates it from the standpoint of state regulators. He was unable to be here today, but we will address a little bit the the state reporting aspects of this, which you should at least be aware of as well. Okay, well, the purpose of the data call, it is required by Section 111 of the 2015 TRIP Reauthorization Act, which is now Section 104H1 of TRIA. It is designed to provide Treasury with a data set that it will use to periodically analyze, among other things, the effectiveness of the program and the competitiveness of small insurers in the terrorism risk insurance marketplace. State regulators have determined to collect similar information for the regulatory purposes addressed by state regulators with respect to insurers under their supervision. Treasury and state regulators are continuing to coordinate in this effort with a consolidated approach that allows reporting insurers, for the most part, to provide the same data set to Treasury through the ISO portal and to state regulators through a portal operated by New York State, and thereby satisfy their production obligations to both through the provision of the same data to each. I should note that while at the you will, if you are reporting through the state portal as well. I'm sorry, do you have a question, Sherry?
No, I just muted someone, Richard.
Okay. If you are reporting to the New York portal, while it's the same template, same document that you would provide, no changes or anything like that, they do have different naming conventions that they require for files submitted to that portal, so you may need to manipulate that. But other than that, the content of the data would be the same. The regulatory due date for this annual data call is May 15th. It has been extended, not very much, but to May 16th this year, since May 15th falls on a Sunday. This was set in light of SPIO's statutory obligation to provide a report to Congress concerning the program, which it must provide every year on June 30th. Because of that reporting deadline on our part, we are unable to extend the time for insurers responding to the data call beyond May 16th, or otherwise we really are in danger of ISO not having time to aggregate the data, and certainly time for us to analyze it and get our report together. So again, please do your best to try to get this done by the 16th. As has been the case in prior years, we are doing separate webinars for each of our 4 reporting templates. They are for small insurers, non-small insurers, alien surplus lines insurers, and captive insurers. This is the webinar, of course, addressing captive insurers, which are any insurers participating in the Terrorism Risk Insurance Program that are regulated under state law as a captive insurer. That would include both pure captives and certainly, as I understand it, risk retention groups tend to be regulated in most states as captives as well. This includes, of course, both domestic U.S. captives as well as offshore captives, but only those that are actually licensed in at least one U.S. jurisdiction and who are writing terrorism risk insurance. Offshore captives that are not licensed in any U.S. jurisdiction do not participate in TRIP, given some certain statutory definitions. Any captive that writes any terrorism risk insurance subject to TRIP must report. That would include certainly standalone policies, but of course it would also include a policy covering multiple risks in which terrorism is just one of those risks, or what we would call an embedded policy. To the extent the captive writes in TRIP-eligible lines insurance, and we'll go over those lines in a moment, but does not extend any terrorism risk insurance backstop by the program, such a captive has no obligation to report. However, there is no reporting exemption, however, for captives that do write some amount of terrorism risk insurance subject to the program based upon the amount of premium they write. A captive writing any terrorism risk insurance under TRIP is required to report no matter how much premium it writes. So in other words, as you probably are aware, there is a $10 million reporting threshold for small insurers in that write in TRIP lines. That does not apply to captives. Reporting is on a group basis if you are part of a group, or otherwise on an individual company basis. The form is the same regardless of the size of the captive. If you happen to be affiliated with a company that is required to report, or I'm sorry, with a group that's otherwise required to report on the non-small or small insurer template, you should report the captive experience on that template, identifying the captive among the multiple companies that are reporting. Otherwise, we are conducting this particular webinar based upon the requirements that are specific to the captive insurer template. There are some new reporting requirements this year for captive insurers generally, as well as for captive insurers that write cyber risk insurance. The changes that you will need to be aware of are on both the premium and exposure worksheets, as well as on the cyber worksheet for those of you writing cyber insurance. We will go over those in some detail as we proceed with a review of the form. Subject to those changes, the forms are basically what you will have seen in prior years, subject to a new modeled loss question for this year, although that question is similar in format to those that have been posed in prior years. Again, remember that reporting is on a group basis, which is how TRIP operates. You would only report for an individual company if you are not affiliated with another company writing TRIP-eligible lines of business. The process for getting started is the same as in prior years, and it's pretty simple. You go to the reporting website, which is www.tripsection111data.com, and download the registration form. A captive manager is permitted to register and report on behalf of the captive, and can do so by submitting a bulk registration listing if it works with multiple captives. Reporting, however, will ultimately be done on separate forms for each separate captive group or company. You will email this registration form to the address provided, and the point of contact listed on your registration form will receive an email from ISO with a link to a secure portal that will contain your required reporting form. Once you complete the reporting form, you will send it back to ISO through the same secure portal. Although this is a consolidated data collection, you will also separately submit your completed reporting form to the New York portal for state reporting purposes. The forms will be provided in Excel format. However, if you prefer to report using a CSV form of report, you can elect for that, and ISO will provide you with specifications that allow you to report in that format instead. As I mentioned, Mike McCauley is having some voice issues today, so I do have a report for him. As of this morning, he advised me that for captives, all registrations received before 4 o'clock Eastern Standard Time on Tuesday, of course now it's Thursday, have been processed, and the secure emails containing secure file transfer protocol credentials to access the templates have been sent. He does note there is one exception to this, which is a bulk registration that they did just receive on Tuesday morning. So that's sort of where things are generally at this point. I see there's a little activity in the chat thing where Mike is confirming that as well. So, and also in the chat thing, chat function, Sherry has put in the contact information for myself, herself, and Mike McCauley, which we'll go over if you do need to get back to us on certain issues later on. If you are actually licensed to write workers' compensation insurance, we appreciate that's probably not the case for most of the people on this call, and you report such information to state regulators, I think perhaps some risk retention groups might be in a position to do this. You should be able to rely upon NCCI, the California WCIRB, and the New York Compensation Insurance Rating Board to report in the workers' compensation fields for those questions, which will then get merged into the data that you are otherwise reporting. However, these entities will not register on your behalf, nor can they provide the reinsurance information relating to workers' compensation exposures, which still need to be completed by the insurer. In addition, insurers still need to provide data for excess workers' compensation policies because NCCI and the rating bureaus will not provide that data, nor would it, of course, apply to figures for workers' compensation deductible reimbursement policies for which such information is not reported to the rating bureaus. So although we suspect that the reporting by the rating bureaus will actually affect very few companies reporting as captive insurers, if you do fall into that category, please keep that in mind just so duplicate reporting can be avoided. Our main suggestion in terms of responding to this is please read the instructions that are located as well as these forms on the TRIP website. I'm going to sort of pivot over to that just so you all know where those are. This is the data call page on the TRIP website. If you go up here, captive insurer form, that's what we've been looking at. And the instructions is a separate document which literally goes through each cell, each page of the template, cell by cell, and providing some further detail concerning our suggestions for certainly what we're looking for and suggestions for responding. Other sources of information apart from the webinar, you can obtain specific help in response to a specific question you might have by emailing TRIP section 111data@iso.com. If you send such an email, you will either 1, get a written email response, 2, get a call from ISO, or 3, get a call from someone at Treasury. Alternatively, and this was posted in the chat early on, you can simply just contact either myself, Sherry, or Mike at the numbers and email addresses referenced in there. And I guess just as a sort of general, I think those of you who have done this before appreciate this. If you have questions concerning the actual templates and what Treasury is looking for on that, you may be better off going to me in the first instance. If it really goes to you haven't got your reporting templates yet, or you have a question about the process there in terms of getting the data uploaded to ISO, obviously Mike is the better source of information for those, but we'll get you an answer no matter who you contact. Additionally, we have generated again a sample answer document which has sort of sample fact patterns. That's actually written on or was prepared on the non-small insurer form, but if you have sort of, in terms of the theory of reporting, subject to the form, the grid that you'll be looking at will look a little different from yours. The principles in terms of the things that might be somewhat non-intuitive in terms of reporting should be the same. In addition, we do have I won't click on this, there's a comprehensive zip code listing, which may be helpful to you for the geographic exposures worksheet. Some of those location descriptions are basically on a state-county basis, so we have actually gone in and identified all the relevant zip codes there. So if it's easier for you to pull the information with zip codes, you may find that source useful as well.
So Richard, we have a question.
Okay, go ahead.
Question is, on the registration form, do I need to complete this form for each captive that we manage? This is the first time I'm filling out the registration.
I'm gonna answer, and I'm gonna ask Mike to respond to all if I in the chat if I got it wrong. If you're a captive manager that's managing multiple captives, you can do one registration form that basically has appended to it the listing of all the captives that you're seeking to report on behalf of. And then when they will use that to process all of the individual forms for each of those individual captives you're reporting on behalf of. Ultimately, you'll need to fill out a separate form for each captive, but my understanding is a bulk registration can still be accepted by ISO, and so you don't need to do a separate registration form for each of those captives. Mike, can you just indicate in the chat that I generally get that right? Okay, well, as Mike indicated, so contact ISO directly on that as the bulk registration. There is the ability to do that, but I'll let him manage with you so you don't you do it right and don't have to knock your head against the wall on that. Okay, we are now going to, we're going to walk through the individual worksheets at this point in the captive insurer template with some explanations as to what we're seeking and suggestions for completing each worksheet. We will then open it up to individual questions, which you can pose. And you guys have figured this out already. If you want to submit a question, probably best for you, send it, and if you just want it to go directly to us so it remains somewhat anonymous, send the question to Sherry Roulette. She'll field them, and she'll alert me, and we'll get you a response on that, either as we go through the webinar or certainly by the end of it. If any questions have built up, we'll certainly be in a position to go over them at that point. So again, use the chat function. If you want everybody to see the question, then obviously feel free to hit to everyone, but if you want to just make it direct to us, that's fine too. Okay, we're going to be walking through, these are PDF versions of the reporting forms as they actually exist on our website. That's somewhat easier to present in this sort of format. Once you register, of course, you will be getting or have already received live Excel versions of these sheets, which ISO will tailor as necessary for each individual company or group based upon the form it should complete, the jurisdictional worksheets it needs, etc. As was the case, and again, as was the case last year, you can do the CSV file format reporting. And again, just you can engage with ISO on that if that's how you prefer to do it. This is the first page, the insurer group affiliations worksheet. That is sort of this basically to identify who you are. Again, reporting is on a group basis unless obviously you are a single company. We use NAIC codes for tracking purposes. As most captives may not have such a number, ISO will assign a number to you for tracking purposes. If you have participated in the call before and are aware of the number previously assigned to you by ISO, please by all means use that number. Regarding the total, as you see on the columns G and H here, regarding the total 2020 policyholder surplus, you will need to identify that for 2020 for the relevant entities. based upon how that would be calculated for state reporting purposes. Regarding 2020 TRIP eligible lines premium, which is relevant as the measure of your calendar year 2021 deductible, if you reported that figure in last year's call, it will be populated automatically by ISO in the forms you receive. You will need to rely upon the number, though, when responding to the questions on the reinsurance worksheet. If you did not report last year or reported a figure that you now believe should be in error based upon further evaluation, then please enter any new or corrected figures. And just so, I mean, I know there's a lot of dates floating around here, but just to level set this for everybody, you'll see this is obviously the 2022 TRIP data call. It largely seeks information once we get past this page on 2021 information. However, because of the fact that the deductible for TRIP purposes lags a year, and we use both surplus and premium to sort of look at that issue sort of theoretically, we do ask you for the surplus and premium figures for the prior year to the reporting year in this year 2020. So that's the only reason that that appears on this first page. Moving forward to the next page. Okay, this premium by jurisdiction, this is by relevant NAIC line or subline. The figures in columns E, F, and G should add up, well, will add up to figure D, because essentially whatever you put in E, F, and G will auto-populate or add up with the formulas there to what's in figure D. Let's see. And then the figure in H is actually, you'll see in figure G, we ask you for, you're putting in the complete TRIP eligible lines premium, direct earned premium for policies where a premium is being charged for terrorism risk coverage where it's being provided. So H is actually looking for the actual amount of that terrorism risk insurance premium as distinguished from the entire policy premium. So by definition, H is a subset of G, and E, F, and G will end up adding up to D, which will be your total TRIP eligible line premium for all policies that you issue. When reporting premium, remember also that all the Terrorism Risk Insurance Program is defined for the most part in terms of NAIC state reporting lines. You cannot follow that in all cases, as there are some significant differences. Principally, NAIC lines 1 and 2, which are fire and allied lines, at least for most conventional carriers, include both commercial and personal lines coverage, and TRIP only addresses commercial coverage. So probably with this group, somewhat unlikely chance that you do have personal lines premium in what you write, that does need to be excluded for purposes of this data call. Also, professional liability on the other liability lines down here, 20 and 22 of the spreadsheet. If you are writing professional liability insurance or E&O insurance, while that would normally get reported on that line for state reporting purposes, there is an express exclusion within TRIP for professional liability or E&O coverage, so that would need to be excluded from there. I would sort of hesitate, or let me add really quickly here. D&O, as distinguished for directors and officers, as distinguished from E&O, D&O is within the coverage of TRIP, so please make sure to report that, and that would be in the other liability lines of reporting. Premiums should be reported on a direct earned basis by state for calendar year 2021. This means that if you had a policy that started before 2021 or ended after 2021, you will need to include only the premium earned in 2021 for that policy. Premiums should be reported on a state basis by the manner in which the captive reports for state purposes. Thus, for example, if a captive domiciled in Vermont reports all of its premium to Vermont because a captive is permitted to do that. Even though it is insuring risk in many states, we do allow that reporting in this fashion for TRIP data call purposes as well. As we will discuss later, this can be done as well for policy exposures when we get to that worksheet. Although when we get to the geographic exposures worksheet, you will need to report that information based upon where your insured risks are actually located. The changes on the premium worksheet this year are twofold. First, and you'll see this on the expanded number of lines we have here, we are now asking that you separate out on a line-by-line basis premium written in all lines for deductible reimbursement policies versus all other policies. Previously, we had only requested this for the workers' compensation line, where we are aware that most of the coverage is written on a deductible reimbursement basis. We are trying to get a better understanding of how captives are writing insurance subject to the program in the other lines as well, and hence that's that's why we've done that separation. So basically, it's the same information you've been reporting each year. It's simply we're asking you to make the allocation between whether it's a deductible reimbursement policy in that line, or if it's basically a direct policy where you're doing the insurance and you're not reimbursing your policyholder's deductible. Now, second, you will see there is a new line 30 here. Total 2021 non-trip eligible lines DEP on an aggregate basis. Now, we're trying to get a better understanding as to the proportion of risk exposures assumed by captives versus outside versus inside the program. So again, if your trip eligible lines premium is, let's say, a total of $5 million, but you're also insuring other risks in any other line of insurance that, let's say, add up to an additional $5 million, you would essentially report in line 30 that additional $5 million figure. So we know that you've basically got other things going on in your operation apart from writing in the trip eligible lines. So that's, and again, we'll go over this when we get the exposures worksheet, but it's basically the same change there. Okay, moving on to the next sheet. This is the standalone terrorism worksheet. This is on a nationwide basis. For comparative purposes, it does ask for information on terrorism coverage for both Treasury certified acts as well as other acts of terrorism that are not certified. You'll see that's the non-certified acts. Again, we do that for comparative purposes. But again, there's been no change to this worksheet. We've sort of seen that anybody has very much in the way of issues in responding to it. So, that's, hold on, I think I've got a question here. I'm going to see if I can respond to it before we go on. Why is it important to know and understand what is the relevance of total non-trip eligible lines DEP? I was under the assumption that the data call process was the assess the effectiveness of TRIA. Sorry, I'm having a hard time getting to that question. Why is it necessary to list out all other premium earned by the captives? Yeah, look, here's the issue. I mean, there's certainly been questions raised by non-captives, frankly, that captives are, what's the best way of putting this, not adhering to the spirit of the program in terms of how they're writing insurance, that they may be getting set up solely to take advantage of the program and aren't really conducting real insurance operations otherwise. We are actually really looking for this information to try to get a better understanding if the captive is, obviously doing a whole host of other things aside from writing in TRIP eligible lines premium. Then that's something that, we think might be useful to know and frankly helpful to captives that want and are participating in the program. So that is the point of it. Again, it's just the total number of what you're writing in those other lines. And again, as to us, it remains an anonymous figure. So that is the point of the question. Moving to, all right, now we're getting to the cyber question. Now this is the worksheet for cyber risk. This is one of the ones that's subject to some additional items that are being requested for the first time in the 2022 data call. So I'm going to go over those fields in some detail. While the categories of information requested have expanded, we are continuing to seek information on both standalone cyber policies, that would be column C, as well as cyber coverage provided as part of a package policy. I will note, based on data call, we didn't seem, at least based on the last couple of years, that captives were yet writing a whole lot of cyber insurance at this point. But again, we understand that could be a developing issue. So again, if it's a standalone cyber policy, the figure should be entered in column C. If it's a package policy, those figures should be entered in column D, and that simply means you're providing some other kinds of coverage besides cyber in connection with what you're doing. What you should not try to report in here is any information on so-called non-affirmative or silent cyber coverage, which is where a policy may cover some sort of cyber loss because cyber is not specifically excluded in the policy. So if you are in that, please don't try to do any sort of assessment, that your policy might have some additional cyber elements in it because, we're really looking for just where you're expressly, affirmatively writing the coverage. Let me just check here. Yes, somebody actually pointed out, is there an error on line 17? Well, thank you. Yes, there does look like there is an error on line 17. That should be large policyholders. We will fix that, at least certainly on our website. And Mike, just alerting it to you. I don't know if that carries through to the other worksheets as well, but yes, that should be large policyholders. So thank you for bringing that to our attention. Now, lines on this sheet, lines 3 through 6 here, 8 to 9, and 18 to 19 request information concerning premium, number of policies, and limits for cyber policies in TRIP eligible lines of insurance that has been requested previously and is continuing to be requested. So you simply, you should just continue to respond to those questions as you have in the past. Line 7, 10, and 20. And 20 request the same information concerning premium, number of policies, and limits, but as applied to cyber policies written in non-TRIP eligible lines of insurance. While the information is the same as the sort of information we have requested in the past, we have expanded it to policies written in non-TRIP eligible lines of insurance so we can assess the amount of cyber insurance that is currently not subject to the program. You'll appreciate this is on account of significant ransomware issues that have been going on at this point. Principally because of the professional liability exclusion in TRIA, we are aware that at least some cyber insurance is getting written outside of TRIA. That's really what we're trying to get a handle of. There certainly have been proposals, suggestions that TRIA might be expanded to address that additional exposure. So that's the reason for those questions. Again, it's the same information as we've requested in the past. We were simply making sure, we really want to make sure that you're now reporting on the entire waterfront of cyber insurance you're writing and not simply those lines that you've deemed are subject to TRIP. Again, we're not sure that may be much of an issue for captives, given that they don't report quite the same way for state purposes as other insurers do. But in any event, that's the point of that. And again, that should be answered in the same way as in the other questions. Now, there are 3 categories of information that are being requested this year that have never been requested in prior TRIP data calls. These are, 1, lines 12 to 17, premium, 12 to 17, premium and number of policies allocated by size of policyholder, measured by its number of employees. Lines 21 to 24. Limits that are specific to cyber extortion and ransom payments. And finally, lines 25 to 30, loss information specific to cyber extortion and ransom payments. I would direct your attention as well to, going back to the instructions, and this is it's on page 3 of the instructions. Special instructions for completing of this cyber nationwide worksheet. You'll see this first bullet is basically what I just sort of reiterated to you, the sort of new data elements we've added here. Basically, the second bullet is, our take on, we have gotten some responses from, and again, I would say this is mostly for conventional carriers that have, obviously a significant book of policies in this area. We certainly heard from some people that not all carriers, and particularly the data element based on number of employees, were capturing this information as they were underwriting policies, and hence, didn't believe they would be able to report it. We've advised that if you didn't collect it as you were writing and are not in a position to report it, we're not requiring you to do that. But basically the test we're establishing here, which is the test we use for all the reporting, is you should be doing it as a full and true statement of the information you're providing to the best of your knowledge, information, and belief. Obviously, if you don't have the information, we don't want you to guess. I would say, well, one, as to information on limits and certainly loss information, which is part of the new information, we'd be a little surprised if somebody wasn't capturing that information. And again, obviously with captive insurers that are obviously working with a much more discrete, defined book of policies being issued largely to their owner policyholders, probably, or we would think that shouldn't be a similar issue as it might be for a carrier that's issued thousands of individual cyber policies. So again,
we have a question, Richard.
Yep. Okay.
The question is if a captive only writes one deductible reimbursement policy for which, as an example, has a limit of $100,000, but the underlying commercial policy covers terrorism, does the captive still have to report? Thought in the past it didn't require reporting, but I might be mistaken.
If the captive is writing a policy that, yeah, I mean, we've certainly not required anybody to set forth separately deductible reimbursement policies before. But, well, if the deductible reimbursement policy is going to, no, I think I'm seeing what they're saying at this point. So the deductible, no, I think I would say, yeah, that is something we would want reported, because if the underlying policy that you're reimbursing the deductible covers terrorism and you're taking care of the deductible, then yeah, you're taking care of part of that obligation as well, which has to be met before they can, you know, get into the coverage of the policy. So yes, I would, that is something I think we would be reporting. Let's see. Going on to the reporting here regarding this new information, premium and number of policies allocated by size of policyholders measured by number of employees. That information not broken out by TRIP and non-TRIP eligible lines. The size categories are the same as those. I mean, this is less of issues for you guys, but they happen to be the same size categories that the NAIC used for their COVID-19 pandemic data calls. Again, you know, since you would presumably know who your policyholders are in some detail on this, we assume this is simply a question of knowing what your policyholder's category is and then reporting the relevant information in those fields. Regarding the new information concerning limits specific to cyber extortion and ransom payments, the distinction we are drawing here is between coverage for cyber extortion generally, which we understand can contain many policy benefits apart from payment or reimbursement of an actual ransom payment, versus limits for the actual ransom payment. If the policies you issue cover basically ransom payments and, you know, associated expenses in addition to that, plus any other cyber benefits, and it's all the same limit, then very easy. You simply report the same limit in all the fields. What we're trying to get at here is if there's some sublimiting going on with respect to the actual, if you're actually reimbursing an actual ransom payment to the bad actor versus other aspects of coverage that you may be extending. That's the distinction. Again, if you have specific questions on that in terms of the intent, you can come back to us on that. And on this one, we are requesting that you set forth the information. Should get back to the form. Nope. Sorry, wrong one. We are requesting you set forth that separately for TRIP eligible and non-TRIP eligible lines. All right, finally, the last category, loss information specific to cyber extortion ransom payments. We are only requesting that as to all cyber policies combined, whether in TRIP eligible lines or not. These questions seek actual paid and incurred amounts for cyber extortion generally and paid amounts for ransom payments, along with the number of claims such ransom payments are associated with. Finally, direct defense amounts for ransom extortion generally without any effort to segregate that to ransom payments specifically are sought as well, again, on a paid and incurred basis. We appreciate this is a fair amount of new information, but again, we believe that these are all concepts that insurers writing in the cyberspace should be pretty cognizant of at this point. Again, we can respond to further questions at the end of the prepared remarks or take specific questions on a direct basis if you would like to contact us separately. Moving on to the next one. Okay, this is the exposures worksheet.
Richard, we do have a question.
Okay.
Does the cyber extortion / ransom payments matter if they are domestic or foreign?
Well, if it's foreign, I'm not sure what is meant by domestic or foreign. I mean, you know, TRIP doesn't cover, I mean, if it's covering, you know, TRIP doesn't cover, I think we're looking for information on domestic ransomware events. I mean, TRIP doesn't even cover, you know, events outside the U.S. except for, you know, with some exceptions. But yeah, I think this is certainly looking for information that's specific to domestic U.S. policyholders. Well, I mean, I'm trying to.
The follow-up from that person is if they were generated domestically or from outside the country.
I'm not actually sure.
The attack. The attack.
Oh, well, the attacks are generated. I mean, practically all the ransomware attacks at the moment are generated from outside the company. So, I mean, we don't want you to, if somehow you've got policies that are covering, you know, an operation in, you know, Germany, and there's a ransom demand to a German entity and you're taking care of that, no, that's not something we want to hear about. But if it's a ransom attack emanating from, let's just say Russia, for example, and it's directed to a U.S. entity that you're covering on one of your policies, then yes, the fact that it's generated from the outside the United States, it's having an effect inside the United States on, you know, on a policy, then yeah, we would want to hear about that. And, you know, I understand there could be with multinational entities, you know, you could have an issue with, you know, is this a German claim or is it a U.S. claim or what have you? But, you know, the fact of where the ransom claim emanates from, no, that can emanate from anywhere. For purposes of TRIP, the real issue is where the effect is. TRIP only covers U.S. effects. You know, a ransomware attack on a U.S. entity situated in the U.S. certainly would be in the U.S. Outside of that, you know, no, we're really looking for the U.S. entity exposure on that. Okay, well, back to the exposures by jurisdiction. This is the last of the templates containing revisions, what we've done that's been in place for the last few years. So we'll try to highlight those as we go through that. Like the premium sheet, this sheet uses the NAIC reporting lines or sublines and asks that you identify the exposures both covered and not covered by TRIP. One of the new features this year is, like the premium sheet, you are now asked to divide your responses for each line by deductible reimbursement policies and all other policies, and not just in the workers' compensation line. The point is to calculate the actual potential exposure under the policies. That is, what is the most you might have to pay under the policy in question. The other new feature this year that we are requesting information on is a new category of policies. And let me try to expand this a little bit. Categories of policies. And this is policies where only NBCR risk, and that's of course nuclear, biological, chemical, or radiological risk, is insured. As you'll see, this is column F in this one, and I believe there's a similar one on the liability side. The column L, coverage provided only for NBCR risk. Again, you know, what we're looking for here is if you know, because of the difficulty in getting NBCR coverage in the conventional market, you are extending literally only NBCR coverage to your policyholder, then that's what we're getting at there. If it's covering, you know, terrorism risk apart from NBCR risk, then no, you wouldn't report anything separately there. So in fact, yep, go ahead.
So I think that same person has a follow-up to their previous question concerning does the cyber extortion ransom payments matter if they're domestic or foreign? And this person writes, I thought that if the terrorist attack was performed by a U.S. citizen, then it would be excluded from TRIP. Would that be the same for a cyber attack?
Well, number one, it's not the case. An act of terrorism can certainly be, there's no international, there hasn't been an international or domestic distinction in TRIP since I think about 2000, it was either 2005 or 2007 when it went away. So if it is a domestic actor, doing it, then it just doesn't matter. So while there was a time, and again, it was either before 2005 or before 2007, where the bad actor, the terrorist, we can say, had to be essentially had to be part of a foreign operation or scheme. That has not been the case since that change. So having said that, we are, the Terrorism Risk Insurance Program in the United States is designed to only address U.S. effects. So we are not looking, to the extent you're a captive that's extending coverage in, foreign non-U.S. jurisdictions and are, responding to situations under that coverage, then no, we're not interested in that. But if you're responding to these claims, or we do want information on policies, and for that matter, claims that are designed to respond to impacts in the United States. That's what we're looking for.
So you did have another question that was directed to everyone in the chat. It's, if we have a specific NBCR policy, would we fill in both E and F, and and it would also be included in D?
Yes. Yes. E, if yeah, it would. I mean, E and F are by definition going to be subsets of D. Yeah, I mean, I think if you, let's say you only wrote a policy that if you only wrote a policy that extended coverage for NBCR risks, then yeah, it would be recorded. It would end up getting, you issued one policy and that's all it covered. Then, because it also covers terrorism, it would fall into category D. And because it doesn't totally exclude NBCR, yeah, it would fall into category F as well. Yeah, we would, so yeah, you would report that one in all three. And it would be the similar response on the liability side. You've got the same sequencing of questions there. Let's see. Okay, well, this is something that hasn't changed. You'll see we've also do ask, and here it's in G, and for that matter in I, if you're actually not providing terrorism risk coverage. We do ask for information on the policyholder deductibles or self-insured retentions as well, which should only be reported in connection with primary level policies that reference such a deductible or SAR obligations. So, if you happen to be writing coverage that sits, higher up in a program, don't report that in connection with higher level umbrella or excess policies, because then you get double counting. We really only want the carrier that's providing essentially the primary level coverage to report that deductible. If everybody in a column reports the same deductible, it ends up making it look a lot more substantial than it actually is.
So we have another question.
Yeah.
For the DRP policies, limits and deductibles are based solely on the DRP itself. For example, only the direct policy between the captive and the policyholder not the underlying policy being reimbursed.
Read that again.
Sure. For the DRP policies, limits and deductibles are based solely on the DRP itself. For example, only the direct policy between the captive and the policyholder, and not the underlying policy being reimbursed. I'm not sure if that's a question or just a statement from that person.
I think for deductible reimbursement policies, what we're looking for there, I mean, forget about the, we're obviously asking for what your experience on your deductible reimbursement policy is. If you're reimbursing a deductible and, I mean, I think this is, I mean, maybe this question is
the person just says wanting to confirm that statement. Would you like me to read it again?
One more time.
Sure. For the DRP policies, limits and deductibles are based solely on the DRP itself. For example, only the direct policy between the captive and the policyholder, and not the underlying policy being reimbursed.
Right.
Is that true?
Yes. And I think I was getting there. Yes, we want you to, because we are now separating out the deductible reimbursement policy. So, for example, if you have agreed to, if your policyholder, has $1 million deductible under a policy written by a conventional insurer, and they'll be reporting that information themselves on their end, and you've agreed to reimburse a policy to reimburse that deductible, if basically it's 100% reimbursement, you're going to reimburse the whole $1 million, then I think you would essentially, without a further deductible on the part of the policyholder, then you would basically put for the policyholder deductible there 0. If, for example, it's $1 million deductible, you've agreed to reimburse $900,000 of that deductible after your policyholder takes the first $100,000, essentially a deductible within the deductible, then yes, there you would report the $100,000. I hope that's clear, and I hope that makes sense in the captive context. Let's see. Again, to the extent you've got a policy that has multiple deductibles that you're dealing with, we ask you to basically report the lowest one. That's really just a convenience thing, but I'm not sure how much that's an issue for you folks, but if you have a single policy that literally has different deductibles or retentions in it based upon what kind of operational properties being insured, then please use the lower of those two deductibles when reporting. And again, when you report that information for the United States as a whole, use the lowest deductible or the SIR. There are also some differences in the way exposure information is calculated as compared to premium. As noted above, the exposure metrics can be reported on the appropriate state worksheet in the same manner as which premium is reported. So if your premium is reported basically just to your domicile state, then the exposures should be as well. Otherwise, however, report the information on a jurisdiction by jurisdiction basis and enter the relevant limits for each jurisdiction, even if an aggregate limit might cap your exposure across multiple jurisdictions. So, for example, if you had $1 million policy covering California and Oregon, you would report $1 million of exposure on both the California and Oregon worksheets, even though there may be an overall limit of $1 million on the policy. On the United States worksheet, however, please provide total figures for the United States that are not multiplied by the issue of limits applying in multiple jurisdictions. So that is, apply here any aggregate limits that might apply, and otherwise respond on a single occurrence basis, assuming no aggregates apply. In the example I previously provided, you would report $1 million as the overall United States exposure. Now, for purposes of this worksheet as well, this one is also a little different from premium, which again is on an earned basis. So we're looking for any premium earned during the year 2021. On this one, please apply your exposure figures as they existed only for policies in force on 12/31/2021. If the policy ended before 12/31/2021, you would just simply report an exposure of 0 for that. So we appreciate that. If you had a policy that ended in November of 2021, that will generate some amount of direct earned premium that would be reported on the premium worksheet. However, on the exposures worksheet, we're asking for, you would report 0. I mean, again, this is given that not all policies are on the same annual basis. We're really trying to come up with a metric that we think at least approximates the limits being extended on an annual basis. And that's the approach we're taking. So with that, I'm going to go back out of this a little more. Okay. And going to the next sheet, which is the policyholder industry code sheet. This is the simplest one you'll probably get on any data call anywhere. Please classify the industry type of your policyholder by simply putting in the applicable NAICS code. And, we understood you may be, to the extent you're insuring, obviously, an entity that's got multiple things going on. I mean, pick the NAICS code that really, sort of is applicable to either the majority or preponderance, whatever the best code is in terms of describing what your policyholder does. That's what we're looking for there. Now, the next sheet is the places of worship template. This worksheet is on a nationwide basis and seeks information in the general categories of property, liability, and workers' compensation. However, on this worksheet, we are only seeking information on policies written for places of worship. When you are reporting this data, please do your best to only report on the coverage related to actual places of worship, while excluding any affiliated religious organizations such as hospitals and schools. So we're really looking for you to, the actual, particularly edifice, the church, the mosque, the synagogue that religious services take place. That's what we're looking for you to report here. We're not looking for religious affiliated operations that really would get classified under a separate code, such as hospitals or educational institutions. You will see that we ask you to report this information under a specific industry code. You can do this under the NAICS reporting system, the SIC reporting system, or ISO class codes. If you can report based on one of these metrics, please do so. If you cannot, but have some other way in which to extract the information, such as a policyholder name search, please do that. We do not have a category here for unavailable because we are specifically seeking data for places of worship. So please find some way in which to report actual or estimated information for policyholders within this category. This is actually a specific request that was put in the last reauthorization of TRIP in 2019. So we don't really have a lot of leeway here. Congress has asked for information on this, so we are collecting it based upon the information they indicated in the statute. Again, for the workers' compensation elements, to the extent you are right, being the I need to complete those particular fields, again, assuming you're in a position to write that exposure. Okay, the next worksheet is the geographic exposures worksheet. This one has not changed from prior data calls. You can think of this as requesting the same sort of information that is requested by AM Best on its annual terrorism questionnaire. Geographic descriptions are the same as those used by AM Best. as I mentioned earlier, to aid in the reporting, we have also generated a complete list of zip codes for each of the jurisdictions on the worksheet. So if it's easier to use that to respond, you can do so. Just see, for example, here, Atlanta. The AM Best description is all zip codes within the 4 counties of Fulton, DeKalb, Clayton, and Cobb. If you go to our website, you can find that zip code file, which will actually have the precise zip codes for those 4 counties. So if that's easier for you to do it that way, that's available to you. And that's available in Excel format on our website. Otherwise, please use your best approximation of those areas. Again, regarding the workers' compensation fields, you would actually, you only need to provide it for, you don't provide any reporting here for deductible reimbursement policies, because that's getting reported otherwise by the carrier that reports, that has the workers' compensation coverage. So if you actually have direct workers' compensation coverage, and again, if you do, it can be reported by the rating bureaus, but so I mean, my guess is you probably wouldn't be required to do much there on that. However, because my sense is by and large, you don't have such coverage, and hence they're not going to be filling it in for you anyway. However, if you do have excess workers' compensation coverage, that would get reported in there, which certainly may be the case. We have provided in here, if you scroll down, there is an unknown field here as well. The intention here is this should rarely be used, and we certainly expect reporting companies to use their best efforts to identify the actual locations of the relevant exposures. So, certainly please do your best on, if you are, well, we do want you to do your best to slot your exposures that fall into these defined metropolitan areas, and then as well as the balance in this all other locations in the U.S. field. The next page of this sheet, seek aggregations by zip code. So here we're looking for all exposures that you have within a particular zip code, and then rank order those as requested. The questions in lines 49 to 50, by contrast, focus on a particular location as distinguished from all locations within a particular zip code. So once you get down here, it's really, really asking you to look at your portfolio and where your largest exposure at a particular site, street location, GPS location, whatever that is. Please give us the biggest exposure there as distinguished from something within the all exposures within the entire zip code. Okay, last but not least is the reinsurance worksheet. This is again a nationwide worksheet, and again, we're asking you to answer the questions here based upon your private third-party reinsurance protection. Do not include any intra-company arrangements that you may have in place here. We ask for information concerning natural catastrophe reinsurance for comparative purposes against terrorism risk insurance, terrorism risk reinsurance. Note, we have some questions on reinsurance exclusions relating to Treasury, relating to terrorism. Apart from the domestic foreign questions, this is meant to capture situations such as the exclusion of risks at particular locations or within certain metropolitan areas. We strongly recommend that if you have an individual responsible for reinsurance in your company, that you forward the worksheet to them for completion, as this will help ensure the accuracy of the data we receive. Now, when responding to this worksheet, and I'm really putting in, highlighting column C here, we really need you to put in a real number there. I mean, we understand reinsurance programs are complicated, and it may be difficult to, come up with a particular figure, particularly if there are different limits or retentions or what have you, depending upon, what's going on with a particular loss. Again, though, if you basically see the spreadsheet we're attaching or see some other summary or just put some description or explanation in column D, you don't put a number in there that's essentially your best estimate of what that is. It really runs the question for us is we won't be able to figure out what's going on there, and it basically means we're not able to aggregate the data. So if you have any questions about what you should put in a field where you think there's some uncertainty, just please direct them directly to either us or to Mike McCauley at ISO. Now, last but not least is the model loss question. We do a different one of these every year. This year, it's an event in downtown Miami, Florida. We do provide a street address as well as GPS coordinations. It is a single truck bomb going off at that location. What we're asking you to do is, if you determine that you have a policy that would respond to loss as a result of that bomb going off in that location, we then ask you to, and scrolling down to the lines 31 to 36, divide that exposure, within, divide that exposure within your policy. So basically, of course, we assume your policyholder may have some amount of the exposure. That would go through a deductible retention. That would go on line 31. Of course, you have a TRIP deductible. That's 20% of your prior year premium. Until you satisfy that on your own, there's no ability to make a claim against the government. So whatever that figure is, and again, that's that 20% of 2020 premium that you're asked to come up with, we're asking you in lines 32 and 33 to report the amount that should go, one, that you'll actually pay net out of your own resources, and then the amount that you're in a position to you cede it off to private reinsurance. Once you've accounted for those, then you would basically take the exposure of your policyholder and your deductible, subtract those from this total loss figure that you're coming up with, and then the balance, at least up to the limit of your policies, of the policy in question, you can claim 80% of that from TRIP. So that's the amount that gets recorded in line 34. That balance of 20%, the so-called copay share, gets reported in lines 35 and 36. And again, same with lines 31 and 32. We're asking you to report to us the amount that you've basically retained net, as well as the amounts that a third-party reinsurer will be probably reimbursing you for. So basically, 31 to 36 should add up to 30. Again, look at, if you're doing this through some modeling program, look at what the loss is reflected. Once you enter these figures, 30, the figure in line 30 should add up to the figures in line 31 to 36. I don't know how it happens each year, but we do get reports where somehow 30 does not add up to the figures in line 31 to 36, which leads us to have to scratch our head, and sometimes we can figure it out and sometimes we can't. So again, that's the intent of this. It's really designed to for you to think through that if an event like this happens, how that event is then spread out between what your policyholder has to pay, what you and your reinsurers have to pay, and then, of course, what you're entitled to claim against the government. Let's see, the scenario also provides, this may not be a big issue for captives, but it does provide some information concerning estimated employee injuries on a workers' comp basis. It is not asking you or requiring you to estimate any potential liability exposure. So if you have potential workers' compensation payments, and I guess you might on a I guess on a deductible reimbursement basis, please try to come up with essentially a market. We've given you some the numbers of individuals that we think might be implicated by this. Try to come up with a figure sort of on a market share type basis as to how many employees you might be responsible for and how that would play out into perhaps your deductible reimbursement obligations. And of course, with the property, obviously any property exposure that you have on account of this, you would be estimating that as well and reporting the information. Okay, with that, that is all I have in connection with the sort of general prepared remarks. Let's see, I'm not sure we have anything else in the chat that we haven't responded to. Sherry, do you have any further questions in terms of your inbox?
No, I don't. I just have one person who asked when the recording might be posted, and I responded that it should be up by the end of next week.
Yep. So far, the recordings seem to be working. They've worked on all the other three so far, so it's really just getting them loaded up onto the website. Probably won't happen tomorrow, but I would hope by sometime next week they'll be available. We can wait at least another minute if anybody wants to type furiously and ask anything else, but I'm getting something in. Yes, for the person that just asked me, you're certainly free to give me a call after the call. And the information I think was put in the chat, but it's 202, whatever it is, 341-2501, I think. So anyway, yes, use that number. I'm happy to walk through anything else. Any other questions at this point? Well, with that, I'm going to turn off the recording. You got one more?
Richard.
Yep.
Yep. It's in the chat.
If the deductible is $3 million as calculated on line 3 of the reinsurance worksheet, and the estimated loss on the model is $500K, then do you leave line 30 as 0? No. We are asking you to, I mean, you're running your model, and your model says, yeah, you've got a policyholder, with terrorism. Well, couple things. One, we are asking you to only do the reporting based on policyholders that have terrorism risk insurance. We have ways to estimate the exposure presented to policyholders who elect not to buy the insurance. So we're really looking on the modeled loss questions for you to be looking at your portfolio that covers terrorism risk. If you've got a policyholder that for whatever reason you issued a policy to them, but they elected not to obtain terrorism risk insurance, you may ignore that. For policyholders that did get terrorism risk insurance, yes, if you determine that the loss on the particular model is only $500,000, but that would be within the exposure of the policyholder, then yes, put in on line 31, put in deductible retention of insureds under policies issued as $500,000, and then that should tote up in line 30 as well, and then you would have zeros in all the other lines because when the loss is only $500,000, you wouldn't get above the policyholder's deductible. I hope that made sense. And I should say we do get that reporting by people. I mean that's not an uncommon circumstance that people will indicate that the way they modeled it showed while certain policies potentially implicated, the exposure falls wholly under or within the retention of the policyholder. and hence basically information gets reported on line 31. That totes up on line 30 as well, and everything else ends up as a 0. All right.
There's another question, Richard.
Well, no, if it's the policyholder's deductible, no, the policy, line 31 is the policyholder's deductible. We're assuming the intention there is that's an amount that the policyholder pays without any insurance. Line 32, and for that matter, 33 go together. That's talking about the deductible under TRIP, which isn't a policy deductible, but the deductible of the amount that Congress, in its wisdom, has said insurers must pay before they can make a claim against the government. In the example you've given me, if the total projected loss is this $500,000, and that falls wholly within your insured's deductible, which in this example is $3 million, then you would put $500,000 in line 31, and that would populate $500,000 into the total projected loss as well, and you'd be done. Now, let me turn it around a little bit. Let's say your model spit out 500 instead of 500,000 as the loss, 3.5 million. In that case, you would basically put the full 3 million in line 31, and you'd put the 500,000 in either lines 32 or 33, depending upon what your reinsurance situation was for that $500,000. If you were holding it 100% net, you know, the 500,000 would be in line 32. If you had 100% reinsurance, there'd be a 0 in line 32, and you'd have essentially 500,000 in line 33. On the other hand, if your TRIP deductible, let's get it more complicated, is 200,000, then you'd have 3 million in line 31, your policyholder deductible. You'd have 200,000 somehow allocated in lines 32 and 33 as the TRIP deductible, depending upon what the reinsurance situation is. And then I guess the balance of 300,000, you would be able to collect 80% of that from the government through TRIP. That figure would get entered on line 34, and then 20% of that 300,000 would remain in that so-called copay share, and that gets allocated between lines 35 and 36. I think I did that right in terms of the math, and I think that hopefully walking through that way, that is helpful. If you look at that instruction document on our website, that actually walks through the model loss question and basically goes through a scenario of payments that go through all the different categories. So that's also a good place to get a feel for what we're looking for there. Right. Not seeing anything else on the general chat. Sherry, anything else in your mailbox?
No.
Okay. Well, again, I appreciate everybody's time today. You've all engaged very well, which means it gives me confidence that you're all working very hard on this, and that's great. Again, feel free to reach out to me, and you know, I'll answer any questions I can, both what TRIP does generally and certainly any particular reporting questions you might have. So feel free to do that. It is pretty much what we do this time of year. So again, good luck with the reporting, and I'm going to stop the recording and wish everybody a good rest of the afternoon.